What's up, my ninjas? How's everybody doing? Um, I wanted to address a specific topic with today's video because it comes up a lot, especially when we have insurance claims with our clients. And it is, hey, the insurance company agreed to this dollar amount. Why? What's this recoverable depreciation thing, or what's this depreciation number on my insurance estimate, and why am I not getting all the money? And a lot of people ask that, right? So let's start with a quick mathematical calculation. Replacement cost is equivalent to actual cash value plus depreciation, right? Now the concept of depreciation is that based on the age and condition of your items, that's how that's how the insurance company is going to calculate what you're going to get paid on your claim. Now, why do they do two payments? Now, let's talk about that. On most insurance policies, people have replacement cost policies, right? And all right, hold on for a second here. They have replacement cost policies, and because they do, they are entitled to get all of the money. But when you have a replacement cost policy that has a depreciation factor, then actually you get the actual cash value first, and then you get the depreciation back second. Now, why does the insurance company do that? To really protect themselves, because there are some people who take all the insurance company money and then they never spend it on the house, right? Hey, Davaron Builders, how you doing down in Vineland? So that's a pretty important thing. So sorry, I'm trying to share this link to my timeline. No, on my own timeline. Sorry about that. Come on. All right, there we go. Sorry. So this depreciation concept is really important. First thing is, what type of insurance policy do you have? If you have actual cash value only, then you're not entitled to recover the depreciation. So if you have a 30-year roof that's 30 years old, your depreciation factor could be 100%. And there are times when I've seen people's roofs get depreciated like 75% of the claim. It's a serious problem. So very important. When you're shopping for insurance, make sure you always say replacement cost, replacement cost, replacement cost. The dollar amount of the premium is almost nothing, but the difference to you as a customer is humongous. So now we're talking about this recoverable depreciation, and how do you get the money, right? You have to do the repairs. Now, there's a couple things there. Number one, you have to prove you made repairs, and that is by documenting and taking photos. Number two, you have to prove you spent equal or greater than actual cash value already, right? And so you have to show copies of canceled checks. So when you are doing insurance-related repairs, please do not deposit the check and then pull out cash and then think you're some genius because you're saving money on taxes, 7% on the taxes, or whatever your tax rate, state sales tax is in your area. That's such a bad idea, okay? And if the dollar amount of the repairs is so big, the general contractor is not going to be able to spend all that cash. It's just not a good scenario. So, prove you made repairs. That's take photos, right? You cannot get paid for something, not repair it, and then try to file another insurance claim against it. Not good at all. So take photos of the repairs, hire a general contractor, and then prove you are committing to equal or greater than also actual cash value. So you need copies of canceled checks. And then the other thing would be you have to prove you are committing to equal or greater than replacement costs. So usually we have our general contractor write a contract for the client that states the total cost of the repairs is equal to the replacement cost number that's on your estimate, and it says deposit. The deposit is equal to the actual cash value, and then the amount due is the depreciation that needs to be released, and saying balance due when insurance company releases the check. Now, every insurance company is also different on their procedures for depreciation release. Sometimes they ask for photos, sometimes they don't. Sometimes they ask for canceled checks, sometimes they don't. Sometimes they only want a general contractor's contract. So some of you that understand business, sometimes you might get 2 versions of the contract. It really depends. But when it comes to recovering depreciation, it's very important to follow whoever is handling your claim, the steps that they tell you to take. If you're going to do everything on your own, make sure that you follow step by step and ask the right questions. But if you do not spend all the actual cash value money, you're not going to get depreciation. Now, sometimes the depreciation dollar amount is very low. Let's say you have a $45,000 actual cash value and your depreciation is like $2,000 bucks. And you end up only spending $30,000 on your project and you have a $15,000 surplus. Why would you spend the $15,000 to get the last $2,000? You wouldn't, right? So in some cases, you never recover depreciation. And in a lot of cases, insurance companies hold a lot of the depreciation money. It's very common that they never pay it out. So that's all I really have when it comes to depreciation. If you have any questions about how to recover it, how to do it the right way, you could always post them in the comments or send me a direct message. All right, everybody have a good day, and I'll talk to you later.